Hello and welcome to this Tuesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up, Luke Falasca is going to give us a broker update. We also have Andrew Cox with us with a shipper update, but first we're going to go to Zach Strickland with the carrier update, brought to you by PowerFleet. Stay tuned.
Hello and welcome to your Tuesday carrier update presented by PowerFleet. I'm Zach Strickland, and we continue to watch our volumes slightly move upwards over the last day or so. Not breaking any records with outbound volumes right now, but we are creeping up. I've got the seasonality chart pulled up right here, and the green line you see there is from 2018, where we had that unprecedented rise in freight volumes that grew throughout the month of May into June. We're about 2.5% below that right now. At a 10,069 value for the outbound tender volume index, which is a pretty strong number considering where we've been in mid-April or so. So last year about this time though, we were sitting at 94.27, which was a very, very depressed year, in terms of freight volumes in general. So again, I'm not too excited about beating a 9,400 number in terms of freight volumes, but it is good news to see that those volumes still continue to trend a little bit higher day over day. Again, we are seeing this stair-step effect. I doubt we're going to hold on to the momentum that we had last week, but we'll see. Time will tell as we are entering the busy season for the freight market. So where are all these volumes moving out of right now? Where are we seeing the most statistically significant areas for freight movements right now in the United States? Pay attention to any of these green markets right here. They are showing statistically significant increases in outbound freight volumes right now. We continue to watch Southern California markets of Los Angeles and Ontario really kick things off with a lot of outbound volume. This makes sense. We're seeing increased pressure on the ports. A lot of imports are still, they were coming in the month of April and then have kind of petered off a little bit, but a lot of those volumes go into those warehouses, and then we're seeing this increase in long-haul freight volumes coming out of Los Angeles right now, which again is making it one of the only markets in the country with that lighter green showing a pretty significant jump in outbound volumes. Some of the other big markets to watch right now: Erie, Pennsylvania, not a huge market. Eau Claire, Wisconsin over here, sitting in the upper Midwest corridor. And of course, we've got Columbia, South Carolina, and Seattle, Washington, strangely enough, showing a pretty big push for outbound volumes. Again, some of this could be due to a lot of the port influx that we have over the last month or so. But again, pretty strong increases in some of these smaller markets, but again, Southern California, definitely the area to watch over the next little bit. What is that doing to tender rejection rates? How is this impacting capacity? Volumes do not always move, coincidentally with capacity tightening. So let's check out and see where we're seeing some statistically significant tender rejection rate increases. Not a lot of big markets on this map. You see that this is largely white, indicating that we're not seeing a lot of growth in tender rejection rate. Therefore, capacity is still really loose in the United States right now. Not seeing a lot of fluctuations throughout the middle part of the country. As you see, it's very white. Even down here in Southern California, tender rejection rates aren't making a huge move upwards in relation to those volumes. But some of the bigger markets, one of the bigger markets that's showing this increase, again, most of these are well below 1% market share. But Portland, Oregon tops the map right here, sitting right over here with a strong increase in outbound tender rejection volatility. So let's break down what we're seeing in Portland, Oregon right now, especially for those of you that are operating on the spot market in these times where you're trying to find freight to keep your trucks utilized while volumes are low. You see right here, we've got the reefer tender rejection index and the van outbound tender rejection index in Portland. Both are showing increases here over the last week or so, jumping all the way up to 4.37%, which is well over the national average, around 3%. So again, volumes not necessarily showing a significant increase, but they are up 11.91% week over week. So again, volumes are being driven out of Portland, Oregon. Not necessarily the best market to go into, because a lot of those volumes, as you see right here, are mid-haul and short-haul volumes on the outbound tender volume index. So a lot of short and mid-haul volumes, anything that's over about, 250 to 450 miles, showing a significant increase in rejection rates right now. So Portland, Oregon, if you're up there, you might have some freight to haul in the spot market. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, good morning, everybody. I'm Luke Falasca bringing you your broker update, and it is good to be back. It's been a while since I've been in front of you, so let's go ahead and take a look. Since I've been gone, there's been a lot of changes going on. The market has really consistently been rising over the past month. That blue line there is what you want to keep your eyes on. Those are those volume levels. So if you've been following closely here since I've been gone, you've noticed that volume levels had their bottom right around the 14th of April and have since been consistently rising. We broke that 10,000 barrier, which is a great line. This is actually the highest volume levels have been year to date, apart from that COVID buying surge that we saw in March. So if you take that anomaly, this is really the highest levels that we've seen. We'll see if it continues, though. This could just be a result of a short-term buying spree as we reopen the country a little bit, but we'll keep an eye on that. Rejection rates have not seen the same growth, although they are coming up off of their bottom. That's that green line there, sitting at right around 3.32%. So there is a little bit of bump off of the bottom, although we still have a long way to go. If these volume levels continue to push and hold, you may start to see that number creep up further, but time will tell. As of right now, capacity is still very loose. We're going to go ahead and look here at our map. This is the weekly volume change map. So remember, if you're looking for areas to call where you're going to have the most success, down here in Southern California, particularly LA and San Diego are seeing some good growth. Up there in Seattle, also seeing a lot of growth in terms of volume levels. Even here in Texas, the white markets are still seeing an increase in volume levels, although they're not quite as significant as the blue market. So for the most part, Texas, minus the border area, is seeing a lot of growth there. Not a lot going on in the southeast apart from Florida. So for the most part, that area is not seeing much growth at all. But otherwise here in Texas, pretty much all along the west coast and a little spotty areas around the northeast, you should have some good success. We're going to focus on LA. LA is really being fueled by imports right now. The blue line there is that volume level. Look at that massive surge in volume pretty much since about a week and a half ago. We're right back where we were. If this chart right here is year to date, you can see apart from that panic buying surge that we saw in the middle of March, volume levels are right where they typically are. This is a very, very healthy part for LA, so they're right back where we want them. Now, the green line is tender rejections. Tender rejections have actually started moving up more out in LA than they have in the rest of the country. It's sitting right about 4.5%, so a little bit above where the national average is. So they're starting to react a little bit more. That's going to apply upward pressure on pricing and going to continue to tighten up capacity a little bit. It's still pretty soft, but it is rising at a faster rate than the national average. So keep an eye on that if volume levels continue to rise out of LA. Now we're going to look at a brand new feature here in Sonar. This came out a couple of weeks ago. This is lane signal. So we're going to look at the LA to Seattle lane. Keep in mind this is for dry van that we're looking. The first thing you see are these gauges up here in the top. You see a score of 51 and a score of 39. What those mean, those are on a scale from 0 to 100. The score of 51 is for the LA market. What that means is the closer you get to 100, the more pricing power the carrier has. The closer you get to 0, the more pricing power the shipper has. In this example, we're going from LA to Seattle. So LA has a score of 51, a slight edge to the carrier, and the destination market, in this case Seattle, has a score of 39. So what that tells me is if you are moving loads on this lane, LA to Seattle, you're effectively asking your carriers to do you a favor, taking them out of a market where they have options and sending them to a market where they are going to be at a disadvantage. Keep in mind, that is going to tighten up capacity, and that's going to provide upward pressure on pricing. And you'll see that on the forecast down in the bottom right. Pressure is going to be up on pricing going forward. I'm Luke, and that'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Hello and welcome to your shipper update. I'm here with Andrew Cox. Andrew, what's the latest?
Anthony, there is a lot of optimism surrounding this volume surge that we've had. People have questions of sustainability, and I'm typically one that's been there to pump the brakes on all of these green shoots that we've seen for the last 5 weeks. I've been kind of a bit of a bear or somewhat pessimistic, but I've been looking at this, the newest data we have from Bank of America, the consumer spending data, and on a granular level, there's a lot of things that stand out to me and that are really encouraging that we might actually have a pretty quick recovery in this. So we'll start from the bottom and we'll work our way up. So the first one is total card spending. So for the trailing 5 days that we have this data, and again, this is a lagging data. We only have it up to the 7th of May, but for the last 5 days of our data, averaged only 10% down. This is a huge improvement over the previous week, which was down nearly 20%, and now down nearly 40% in the first week of April. So total card spending is gradually moving up. That's a great sign. The next one is retail excluding automobiles. As you and I have talked, the demand for automobiles is likely going to be soft for some quarters now moving forward, so I'm glad that they pulled it out. But the retail spending, if you told me that retail spending would be up year over year for the previous 5 days during one of the worst recessions in our history, I would tell you you're crazy. So just as the consumer pulled us through the last few years of that bull run, that's likely they're going to be the ones that we rely on to pull us out of this recession. The next two things that I want to point out is online electronics continues to tear. It's up, it's double up over what it was last year, and this has been up considerably since that stimulus check, which this is one thing that I kind of want to talk about as well, is about the sustainability. There's obviously been a bump in consumer spending since that payday we all got. Most of us got it starting the 15th of April. Right. So I don't know if it's going to be sustainable without another one, but that's to be determined. And then lastly, restaurants is another thing I wanted to talk about. It's only down 36%, about 35% of the trailing 5 days. That means that 2/3 of our spending at restaurants has already come online. I think that's, again, another really positive sign.
Andrew, there's a lot of catalysts behind this, right? So you mentioned we have that stimulus bill. There's also that bump up, right? $600 extra per week for those that are now receiving unemployment benefits that could be supporting a lot of this. So this is something that could be sustainable through at least, I think it ends the last week of July.
I believe so, yep.
So do you see any kind of headwinds potentially if this does not get extended into August, and now we see a lot of consumers that now are down and out once again?
I definitely do. That's why you see these discussions happening right now about I guess it'll be a third or a fourth stimulus package that may focus a little bit on infrastructure, but also have some more direct payments to consumers that have lost their jobs. I think that we'll eventually have something like that. I think we may have an extension because a lot of this spending has been propped up by the direct payments to us through unemployment and through the stimulus checks. And now that the economy reopening is helping push things open a little bit, but again, it's being inflated right now. So I'm really hoping that it gets extended. I think it will need to.
Right. And Andrew, one of the things that I'm hearing a lot is, of course, consumers are now, some of them, of course, are making more now with unemployment benefits. Do you think there's going to be some hesitancy, even after everything clears up, say there's progress made, economy starts reopening? Do you think there's going to be some hesitancy for individuals to start kind of getting back out there in the workforce?
I mean, wouldn't you? It seems like on an anecdotal level, you got to look at yourself and think, if I was at a job where I wasn't making as much as I am now, and I have my employment benefits extended, I don't know if I'd be looking for a job as well, but right. I guess that's going to be the pressure, that's going to be the kind of give and take between the government and the people determining whether or not they need to extend benefits and when they can get people back at work. Do they then turn maybe towards the businesses and look towards maybe more loans to businesses to rehire their people? Maybe that's an option. In either way, it's going to have to be an ongoing conversation.
And Andrew, thank you so much. Insightful as always, and thank you so much for tuning in. That's going to do for the shipper update, and that's also going to do for this edition of FreightWaves Now. Don't forget to check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.